Good afternoon, traders. I wasn't able to trade this morning, but I can update you on my swing trade, which I've been in now since March 25th. Long time with Splg, which is an ETF that tracks the S&P 500. This account started at $500 in January. I didn't take my first trade until February. It's up to 517.34 right now. You can see that the market's been selling off all day, so we're at a loss for today, but overall in the trade, I'm green. And I'm expecting this to probably fall down to about 515, 516 by the time this trade ends. So still green in this account for the year so far. You're not expecting big gains with swings like this, but that's not the point. These were kind of getting my feet wet with swing trading, and I am going to be taking this money out of this account once this trade is completed and put it into Webull, because you're very limited on what you can do with this Chase self-directed trading, and that's probably true with other bank-based trading. Like, for example, you can't trade any leveraged ETFs like SPXL, which also tracks the S&P 500. So I could be basically doing the same trade that I've been doing with SPLG, but getting 3 times the gains. So anyway, you can see the account here, at least the balance of the account. So we started in January 500, didn't take the first trade until about February, dipped down to about $3 below where we started, and right now we are really in the 517 level, because this is as of yesterday. So anyway, if you want to, I can show you as well let me see if I can get back to that page. Yeah, so I'm not going to go through all these because there's like 40 transactions here, but I just want to show you, this is starting January 1st, and you saw earlier that I deposited the money well after that. So this is just all of the trades or transactions that I've taken. Some of these dates don't really make sense. If you look at the dates and the prices that I got in the stock, it just doesn't make sense. And there's another reason why I am looking forward to leaving Chase. For example, the trade that I'm in right now, I got in at 45.92. It says that I got in March 30th, which is just not possible because the price was way above that at that point. And, I marked it on my chart that, here, I guess right here. Okay, this makes sense. I was looking at, the settlement is March 30th. So anyway, if you want to know, I guess the date that I put in the order, it doesn't even show you that, but it was March 25th and it got filled on March 26th. So that's the trade that we're going to be going over right now. But this is every single trade I've ever taken with this account, which is either with SPLG or the ARC ETF, which I haven't been trading in a while now. I guess the last time was, April 12th. So let's take a look at the chart right now. Pretty interesting trade today. Everything is selling off big time, so it's not surprising that this trade is looking like it's going to stop out pretty soon. Take a look at the SPLG chart again. This tracks the S&P 500. So the S&P 500 is selling off today, so will this ETF, and or it'll track that at least. I also noted something very interesting on the chart. This is a 0.6% gap down. That's the largest gap down that we've seen in many months. Back here, let's see, this was January 27th was the last time we saw a big gap down like that, and it hit the 50 MA line there. So I'm expecting it to hit the 50 MA either today or tomorrow. There is a chance that if we stay above the 50 MA today, that there might be a bounce tomorrow, but it's not likely going to last. Sometimes this thing comes down near the 50 MA like it did back here. You can see down on this candle, it came very close to the 50 MA, then it bounced, and then a couple days later came back down. So same thing back here. And then before that, the other interesting statistic, and this is, things that you could do to try to figure out your trades, and especially if you're swing trading, this long-term data with ETFs that move more predictably can be very helpful. The last time we had a gap bigger than that was 2% gap, and that was right before the crash from the pandemic. So that is a pretty notable thing to notice. And let's go back to where we are right now. If you haven't been following my previous videos, the idea behind this trade was to let the price come down and touch or go below the 50 MA line, and then I would get in for the break of a daily candle. So I did that basically starting back here. I took that trade and then sold it here. got back in it, and then sold it back here for a loss, and got back in again and sold it back here, I think maybe for a small gain, I'm not sure, but definitely this is the best trade so far. And this is really what I've been looking for the whole time, because if you go back in the history of this ETF, it comes down below the 50 MA and then comes up and stays above it for quite a while. Definitely long enough for nice swing trade. Same thing back here. So this is something that you've seen happen, and even before the pandemic. If you go back further, look at this long trend above the 50 MA. Does it many times. Here's another one. So you can go, now we're all the way back in 2019, the beginning of 2019. So you can see that it's done this many times. So that's what the idea behind the trade is. And then I just stay in it as long as the price is above the 50 MA. So I got in this thing on March 25th for $45.92, and my stop loss was 1 cent below the daily candle, the previous daily candle that I entered on. I wrote it all down right here. So my initial risk was $4 total, because I'm only buying 5 shares with this. I split that $500 account up into 2 so that I could trade 2 different things. Like I said, at one time I was trading the ARK ETF. So this is essentially, let's see, 45.92 times 5, I think is like 230 or something like that. So about a $230 investment with a $4 risk initially, and now I'm basically up about $8. So it's a 2-to-1 risk to reward at this point, but there's no guarantee for that, and that's not really what I'm shooting for. I'm shooting to ride this trend as long as it can go. So the ultimate reward could be 3-to-1, 4-to-1, who knows? And it could of course be less than 2-to-1 if it comes down, or it could be a loss if it comes down before it gets too high. So that's where we're at today. And also, if you've been watching my previous videos on the swing trading, you know that I made this little model based on averages of the last few times that it's drawn down and touched the 50 MA. This one is in purple because it wasn't after an all-time high. So these were all all-time highs, and then it drew back down to the 50 MA line. So now we're at another all-time high. And based on this model, it should touch the 50 MA really today at the earliest, and at the latest it could be way up here, but we'll never see. I mean, we won't know for sure. We will see, but we won't know for sure until it happens. So anyway, this is just kind of like a fun little thing I did. I don't really expect it to be super accurate. It's only based on once the all-time high is established. So I started with it back here, and predicted me getting stopped out around here somewhere. But of course, this thing kept making new all-time highs. So every time it does, I move the model up. So anyway, it's just a fun little kind of side project with this. So let me know if you have any questions about this swing trade or any others. Again, in the future, I'm going to be doing these swing trades with Webull. So they should be a little bit more interesting, more exciting, because I will be able to trade the leveraged ETFs and possibly earn more profit from those, or take bigger losses as well. So we'll have to see what happens. And as I said, any questions, let me know. As always, go into every trade with a plan, stick to your plan, take your stop losses no matter what, honor your profit target, and in the long run, you should be green. Take care.